Hey, all, Sean Maloney, Digital Business Masters. Okay, welcome to another overview call, all things strategy. We're here every single week. Look at it as a motivation. Look at it as a mindset focus. Look at it as a way for you to keep on top of your business. You are running a business. You're not running a hobby. So the whole idea is to get a focus, stay focused, and that is best served by looking at the big picture. Keep an eye on the very highest levels of what's happening in geopolitics and macroeconomics, and then use that. Use it. Don't be used by it. Use it. You've been used by the system, possibly all your life. You now need to learn how to use the system. Yeah, the system is changing quickly. We're hopefully getting rid of the malaise. So this is the most valuable information in the world. Now we then take that and convert it, as we've been doing in DBM for most of the past decade, well over a decade. We learn to apply that information to real world, individualized, decentralized business, predominantly in the digital asset realm. Right? Very powerful. I wish more and more people would understand this, and I wish even more people would have the fortitude and resilience to do it. Obviously, they don't, because they've had generation after generation of being entitled. Things have to change. On that regard, we're not here to give you any advice, all right? Especially not financial advice. What you do as a big boy and girl is your business, yeah? What you're capable of, what your mindset is your business. What we can do is help you and go through a process of mindset to wealth, but it is a process, and you will find it difficult, obviously. So what we do, we have a full academy structure that enables people to take the big picture information, make of it what they will, stop listening to people around them who maybe want to keep them inside this dumbed down mentality. Break through, get rid of your comfort zone, and start to build up what it is that you want as an individual. That starts with understanding one basic principle: the difference between currency and money. The world has fallen into a century, probably over a century, of broken money. If you know your monetary history, if you've read the books, if you understand the difference between currency and money, you'll know that that's a fact. Now, lots of people are very successful in that realm, but the majority are not. And it's not as if it's becoming easier for people to avoid the challenges of being caught up in broken money. It's actually getting much harder because more and more people are just following what their parents did. And now we're into a third generation, okay, since the baby boomers. The baby boomers took most advantage of broken money, yeah, because of the way they were able to shift things back in the 70s and 80s. But now we're into the third generation of individuals, Generation Z, who are in all likelihood going to have a less useful, valuable, opportunistic, whatever you want to call it, long-term life than their grandparents. So the whole idea is to understand that if the world isn't going to fix the money as quickly as you might like, you may be a boomer, you may be a Gen Xer. Time is of the essence. If you're a millennial or a Z, then you've got a bit more time, but you've got to learn that even in your time frame of life, at the way the world is currently operating, they're not going to fix the money from the top down. In fact, quite the contrary. We'll talk about it in the macroeconomic section, the standoff happening between the hegemony, the establishment, and what needs to be done to move back to sound money as we were prior to 1913. Even, it doesn't matter what generation you are, the premise you have to understand is to take responsibility and understand the difference between currency and money, and then understand the steps you have to take to own sound money in whatever form that is. We'll give you a few different definitions of that. But most of all, today, what you can do is stop mining fiat. And if you are going to mine fiat, which means basically going out there and exchanging time and skill for fiat currency, which devalues at 8 to 10% per year. If you are going to do that, make sure whatever you do, you convert that devaluing, broken money, fiat currency. Make sure you convert that into accretive, appreciating assets. So don't directly take mined fiat currency and then expect to have a lifetime of staying with your head above the water by directly converting that failed fiat currency into the price of liabilities. Don't directly do that. Take your failed fiat currency and convert it as close as you can to the center of the money supply. That gives you accretive assets. The irony being that just you owning those assets means that you will end up with more purchasing power because, as I say, the irony is that as they keep printing more and more currency, which is very much looking like they're going to be doing for at least the next 10 years plus, so there's plenty of runway yet to still go with this. If they keep printing fiat currency, your purchasing power is protected because you have ownership of accretive assets. You then use those accretive assets to deploy into various forms of what's called cash flow, and you use the cash flow to fund liabilities, just like you would in a normal business. Question is, do you understand what it is to run a normal business? And if you don't, that's part of the skill. So DBM specializes in helping people not just understand that big point, but also to understand which assets to own that accrete and appreciate in fiat devaluing terms, and also to then run a business. So in part 2 of this call today, we're actually going to take a special look at what's called collateral planning and how to actually work a balance sheet that you've built up and are building up and will build up in the future to perpetually use the system, which is devaluing in fiat terms, your transition into appreciating asset terms that then gives you a perpetual dynamo on which to fund cash flow and persistently outpace inflation at the same time as funding liabilities to your heart's content. That is how simple it is. Fix your own money. Nobody's going to fix it for you. Very, very important message, which is why we talk about every week. We do it on 3 broad pillars. A lot of people still ask, well, okay, that sounds great, but what do you do in real terms? What are the practical steps you take? Well, we take 3 practical steps in broad terms. First of all, we own sound money, which manifests itself in the digital space as Bitcoin. You could also argue gold is doing that remit, and that's okay. You know, we've acquired gold over many, many, many years as well, because we understand, and now look at gold, all-time highs. We were talking about gold acquisition well over a decade ago. Did you dollar cost average gold into your life? Same with Bitcoin. Just own one Bitcoin. We've been saying that for as long as we've been around in this educational side of this digital space. Just own one Bitcoin. Have you dollar cost average Bitcoin over the past 10 years? 5 years? 2 years? 1 year? 1 month? Do you own more Bitcoin this month than you owned last month? Or you've got all sorts of reasons why that's not the case? Of course, maybe you have all sorts of reasons why that's not the case, because it's easier to come up with excuses than it is to apply action. That's another part of the motivational reasons that we have the Academy. Stay focused. So accumulate the hard asset, accumulate sound money, and await equity. Don't get caught in the moment. Don't get caught in the day or even the week. Think about the month. What was the price of Bitcoin a year ago? What was the price of Bitcoin 3 years ago? What was the price of Bitcoin 5 years ago? What was the price of Bitcoin 10 years ago? Has it been the most accretive asset the world has ever known? Has it averaged at 68% compound annual growth rate for the last 14 years? If that's the case, why are you not focused? When you have got that equity, which is a natural consequence of compound annual growth rate, you then have the privileged position of being able to use that equity, in other words, the world's largest balance sheet, You're interconnected with some of the biggest brains and biggest companies and even now biggest countries on the planet, accumulating sound money for all the reasons we discussed earlier. Why are you not part of that? And if you hold that position for long enough, that one position you took at that point in time, months, years ago, provide you then with an equity position. But what are you going to do with the equity on your balance sheet? That's your opportunity to convert equity into what's called yield. And it's the yield that then gets managed. You have to manage that. That's the business side of it. That's the P&L, profit and loss. Manage that. This is where people struggle with the fortitude, the resilience, the framework, the mindset. People really, really struggle with this. Hence, we set up an academy 5 years ago to help people who wish to be helped. So you find all sorts of ways to create yield. Is it a straight line? No. Is there always things changing and moving? Do suppliers change and move? Of course they do, just like suppliers do in any other business. There's no silver bullet. Focus. Find things that yield. We focus on, as much as we possibly can, an average of 10% per month. Per month. We do that ideally in USDT, USDC, because we've got some level of stability there, but we don't stay there for long because we know that both USDT and USDC are based on predominantly US treasuries, and therefore we know that they will depreciate as they print more dollars. So we don't hang around there, but it gives us a nice, stable place to be over months. The ideal scenario is to operate a proportion of your business inside the altcoin space, which is equity plus yield. This is even harder to do. If you don't know what you're doing, don't get involved with altcoins. But you're basically taking the benefit of an internalized dynamo, which is an appreciating asset, the altcoin itself, that is plugged in directly to abilities to create yield and increasingly now self-dynamo cyclical effects within lending platforms in the same system. In other words, you never sell your asset, ever. You work to collateralize, which again is what we'll show you in part 2. Now, we know this is a lot to take on. Of course it is. You've been told by people, your teachers, your parents, your friends, your bosses, your banks, your governments, the malaise. It's been around all your life. The whole idea is for you to shake that off and say, look, this isn't working. This isn't working. Something has to give. And it might be not just you. You might be a business owner. You might be doing very well. You know, I know lots of people who do very well in the fiat system. They have no reason to complain because they're earning a certain level that will always give them the ability to stay ahead. And that's okay. There's nothing wrong with that. But this isn't about the small group, relatively speaking, out there that is able to go and run their own business and take initiative and make a difference. This is about the billions of people out there who are simply used by the system. So what do we do about that? Do we just richest man in Babylon and run off and go and live somewhere else and look after our own wealth and not worry about anybody else? No. We do our best to take what we've done, take what we've achieved, turn it into some sort of model and convert that back to people so that they can follow a certain process. That's the best thing to do. That's how to give back. That's better than charity. You inform people. You teach someone to fish. You don't give them fish. So the whole idea is 5 years ago, which is a lifetime ago in this space, we set up an academy model. This is it. You decide where you are and you move up the ranks accordingly. It's a process from mindset through skills, through the systems, which is the business side of things we talk about in part 2. Then the income comes if you're good and if you have the resilience and if you're able to manage and if you're able to take on the skills and apply the skills that you've learned. Then and only then will you get anywhere close to wealth. And all wealth really is you keeping hold of your income. Now, quick footnote, it's always a good idea to start where you're at. Okay, now lots of people have been through the process I've just described and got thrown out either side of the train. They've just fallen off the train, right? That's okay. This train will stop again for you and you can get back on. But the train will continue. The train knows where it's going. It's not stopping. It will continue down the track. But we're always aware that people will come and go, come and go, come and go. So we're always trying to evolve and, adjust how we do things. AI arrived in our business model a year or so ago, and we've taken the advantage of AI now to do things that we could never really do, not at this price. So for $25, you can get involved with a perpetual month-over-month series, which takes you through every single step necessary for you to get into the front seat when it comes to what it is you're doing in your digital business. It's your digital business, nobody else's. So whatever you've been involved with, whatever you've done, whatever your opinions are, whatever your emotions have taken you, whoever you've been listening to, to try and appease you in your sense of achievement, whatever, doesn't matter. If you've got assets deployed in any stage and any train station along that train track, and you got thrown off the train or you fell off the train, your job is to get back on the train and keep moving. Your assets still exist. They've not walked away. Maybe you have. So get back on the train. This Wealth Builder series gives you the ability to do that in your own time, nice and easy, at a very, very affordable price, $25 a month, just to get started with it. What you'll find is, what we do find with people, is to get started there and then they move up the ranks. They move up the ranks. The most successful people, obviously, are in the income subscription because they're most plugged in and most attentive. And they have absolute accountability. Don't underestimate accountability in this space, guys. It is a big part of success. Now, all that is the foundation. What we then do is have a look at the smoke signals, what's going on in the world that's giving us the ability not just to keep going, but also to make more and more and more and more efficient decisions. Every single month, and certainly every single year in this process, we are more effective and more efficient. Obviously, we're learning, we're applying, we're observing, we're supporting, we're getting all sorts of feedback. And all we have to do is keep moving for long enough to know that as we move forward, when you just look at Bitcoin itself, you end up with this accretive position. How do we know this? Well, because we've been involved with Bitcoin since all the way back in the early 2010s. We were told we were crazy then. We saw 2017 come and go. We went through a huge, troughs in the sense that you can see on this chart. It wasn't as aggressive as it looks. It was just working in these moments. Any single position you think is flat here has within it its own ebbs and flows. And if you understand how to work the market and observe, then you're able to continue your business, realizing benefit and leverage from the world's largest balance sheet. So that's what we do. And then, as we suspected many, many years ago, that eventually there'd have to come a point where some regime change, some policymaker, some businessman, some politician would have to come along and start to say, this is crazy. The world cannot continue with jet GDP well over 100%. The world cannot continue with increasing suicide rates, with more and more people escaping into drugs and desperate lives, higher crime rates. Of course, this is all the frightening side of what you'll hear. And if you listen to the media too long, you'll think the world is going to hell in a handcart. Of course it's not. We live at the most amazing time ever to be a human being. But to have the idea that the politicians and the bosses and the banks are going to make it easier for you and you're going to be able just to ride off into the sunset, falling for everything they say, is obviously a complete anathema. So you get hold of the information, but most of all, you put yourself in front of the wealth revolutions, right? And fortunately for us, since 2008, there's been a massive opportunity to get in front of the next revolution. And that is not just the combination, the benefits of digital assets in themselves, and the communications age and the AI age, and the freedom we have to do what we're doing right now for the cost of a broadband. That's powerful and valuable enough as it is, especially if you're talking to the average factory worker or office worker. But the real benefit we've had is the combination of that increase in the ability to communicate and identify challenges and do things as individuals to put things right in our own villages, towns, cities, and countries. Combine that with sound money, and all of a sudden, you end up with a real reason to get out of bed. That manifested itself as Bitcoin. And anybody who has been determined and has had the vision and the determination and discipline to accumulate the hardest money the world has ever known over the past 10 years, or even the past 2 years, and going forward into the next 5 years, anybody with that level of resilience and awareness has an opportunity to go out there and change the world. And it's all done off the back of having the freedom, which is ultimately what money is, to be able to think every day about how you're going to make a difference in your life, your children's lives, then everybody else's lives. That's the privilege of what it is to operate in this space. Now, where do we get that determination from? Where do we get that resilience from? Where do we get that fortitude from? Where do we get it from? Well, these days, it's really easy. If you've been working in this space for over a decade, you'll know what you're made of. If you've been able to withstand everybody's opinion that is in the malaise, yeah, they were born into the malaise, they've been educated in the malaise, they still work in the malaise, and they're determined that nothing can change from that because nobody likes change. So your brother-in-law, your parents, your friends, your bosses, your banks, your governments, everybody will be telling you in some shape or form that you cannot stray off the path. Little do they know we're not straying off the path. The path is still the same path. We all work through life. But there are very different paths. And it's a case of making sure you identify what that is. And then all of a sudden, with that experience, something shifts. Something shifts. Now, this has been going on a long time in the background, but what is brand new is the sheer shift, absolute change in what's been happening at the highest political levels in the world. And it's got nothing to do with individual politicians. It's got everything to do with policy. It's got everything to do with business people finally taking over and teaching people at the highest levels of decision-making and policy what it is to run a country. The cascade effect of that has been numerous changes just in this past 12 months in the macro level. Obviously, mainly centered around the biggest economy and the main fiat currency that has been in place since 1971, called the US dollar. You'll hear us talking dollars, right? Even though I'm based in the UK, we're always talking dollars because of this. So what we do every week is we just go through just a couple of points just to highlight where we see repeated validation and vindication. Not thinking everything, is, we're not looking through rose-colored glasses. We're not trying to justify our own opinion. We're just looking at the main headlines that give us more and more and more evidence that what we understood a decade ago is now becoming part of the fabric of human existence. And it was always going to be. This is a people-up revolution that is quickly being taken over by institution and establishment. It's got to be said, but it doesn't really matter, because if you understand Bitcoin as a technology and you understand how to be secure and safe and managing that in your own business, then you just get a net benefit to your business balance sheet off the global balance sheet. That's what's called being closest to the money supply. Now, if institutions like the SEC are approving Bitcoin ETFs on US major exchanges like the NASDAQ, etc. That's not only a sea change compared to where we were just 3 years ago. That is a massive shot in the arm for the journey we're on. Again, try and stay away, in my humble opinion, from the personalities. Too many people get affected by the personalities. You've got to look at it in terms of the personalities that are influencing the era that we live in, and most importantly, the era we're heading into. Okay? That's a mindset and a very much an emotional thing you've got to get right. So when you hear the Trump family, American Bitcoin, which is a big company, owned and operated by the Trump family, Trump's sons, look at it as a business. Don't get Trump derangement syndrome. Yeah, I know a lot of people suffer from that. So the whole idea is that as they go public on the NASDAQ, then, you know, that's another big momentum going forward. Bank of America, volunteering now that they're aware most investors have zero allocation to Bitcoin, and 67% of fund managers have no crypto whatsoever. That is a very good sign, one, of lethargy and ignorance, less these days of complicity, because it only takes the Bank of America and BlackRock and Vanguard to decide as a board that they're going forward with this for all these fund managers and financial advisors and everybody else, all the underlings, to then either be instinctively, which if they're good enough, they should already be doing it. Obviously, they're not good enough, so therefore they'll be told what to do. And once they're told what to do, you'll find the masses come forward, because the masses are even less intelligent, with all due respect, than the financial advisors when it comes to finance. Big part of the problem is in that, by the way. Always seek financial education. There's plenty of rare things on this planet, all right? Plenty of rare things on this planet. And another interesting, maybe more fun way to analyze macroeconomics at this level is to look at Park Avenue real estate, look at Ferraris, look at the Crillon Hotel. Yeah? Look at these very aspirational, very expensive things, and just know that the price of these things will continue to go up exponentially in fiat, but the price of them will go down rapidly in Bitcoin. One of the privileges of you going through this journey and understanding what it is to take the skills to enough level to be able to systematize your business, as we'll talk about shortly, and then start on the process of owning accretive assets. One of the privileges of that is being able to afford the things that if you were in the fiat system, just doing the same things through day after day through time, without the uplifting benefit, the foundational benefit of owning assets, you'd never be able to afford a night at the Crillon Hotel. In Bitcoin, you can. And increasingly so as time passes. That's a crazy thing, right? One Bitcoin now gets you a home, a house. 10 years ago, one Bitcoin barely got you an iPhone. See? Same applies to other hard assets, by the way. SEC just approved Bitcoin ETFs for listings. As I said, that's a repeat there. I've just said that already. Establishment bank kickback. Now, this is worth noting. Okay, you are going to get this. I do sort of touch on this every single week, but it's an important thing to watch in the moment. Okay, so you've got Coinbase being a big part of the crypto lobby. For example, Coinbase in conversation last week on the media with the big banks, and a very interesting statement. I'll put it in quotes. If the banks manage to get Congress and the president to pass an amendment to the Genius Bill, which has already been passed and is now going through its second phase, by the way. So already the big banks are looking for amendments, which was not unexpected. But if they get through this amendment, which will block citizens from receiving 4% stablecoin yield, 4%, remember what the banks are providing is barely 1% if you're good, and giving it to the banks instead, then you will know without any shadow of a doubt that all your elected officials are owned by the banks. Now, we already knew that and know that. Everybody knows that, right? It's the same with the pharmaceutical industries. It's the same with lots of industries. The lobbyists, I'm talking about America, but it's all pervasive in Europe as well in the UK. Don't be under any illusions about that. We'll talk about some of the standoffs going on at the moment between the monetary policy politics and the fiscal policy of the Bank of England. But your only defense against this is the crypto lobby, right? And it's not just to sit back with your arms folded and wait for those people, wait for that lobby, that crypto lobby to become powerful enough. It's for you as a citizen to get hold of your MPs, get hold of your senators, get hold of your politicians, tell them what needs to happen, be informed enough to ask them the right questions so that they can see that the populace understand what's going on, which is part of the reason the politicians and bosses and banks get away with so much, because the populace don't know what's going on. So be part of the journey. Start knocking on doors, start picking the phone up, start emailing people. But most of all, start owning the underlying asset. Start voting with your feet. You're not going to get another chance to vote in some countries for another 3 to 4 years. You don't need to wait for political cycles to make a difference. What you do is you get out of bed and you start to move yourself and your money and your hard-earned finances into a position that gives you, from the bottom up, the benefit. That is the only way. It's a bottom-up revolution, okay? So it's unlikely that the banks are going to get this kickback on the genius bill. Well, let's not take any chances. What are you waiting for? And in the meantime, you've got companies like Strategy, just not so quietly anymore, but they have been doing it quietly since 2020, but very noisily now. We had Michael Saylor in the White House last week advising some of these people, some of these politicians, etc., on best practice. Thankfully, now with this new administration, it's opening up ears. Yeah. And it's one of the very rare things, actually, the crypto lobby, that both sides of the Senate actually agree on. It's got to be said. So fair play. But either way, the likes of Strategy moving now to the next level, which is to seek credit ratings for its preferred equity, is just another rung in the ladder that's going to make sure that other companies follow. In other words, he's pioneering this whole change. Now, on a much bigger level, you've got the Fed. We've spoken about this for many, many, many years, about being closest to the money supply. If you want to get ahead in this life, you've not only got to understand what the money supply comes from and what it is, you've got to move yourself as close to it as possible. Now, you can't go printing currency. That's illegal. But the Fed can. And the governments can. Go figure. But what you can do is go around and pick up ownership of assets that they're starting to use in order to protect their hegemony. That's the irony. Now, traditionally, the Fed Reserve has a traditional dual mandate and a role of price stability and maximum employment, both of which they've failed massively on, right? They've exported inflation for decades, and now the chickens are coming home to roost. Not in the way people expected, because there's a lot of destitution in Western societies because a lot of people are figuring out that there's no point going to work because the welfare state picks them up, and the gamble that the politicians made in Europe and US particularly, and obviously over in Australia, etc., is that they imported cheap labour. They thought that that would create the momentum to get the trade deficits up to where they wanted it to be, but lo and behold, that's failed. Oh, quelle surprise. Now, a lot of the people who have come in on that basis to these countries are now not working in the system second, third generation, along with all the original generations. And now you've got a major welfare issue and destitution and all the things that society has as its problems. So the Fed comes in now and says, oh, well, tell you what, well, it's not even the Fed yet, is it? It's people, it's the new wave of governors coming in, manifested at the moment by Stephen Moran, now talking about a third mandate to moderate long-term interest rates. Moderate. That's a new thing. We have to watch this with interest because for me, frankly, even though I don't think it'll happen in our lifetimes, but frankly, this is the start of the end of the process from what started back in 1913. Go and read The Creature from Jekyll Island. The mention of the third mandate has sparked debate among analysts, with some seeing it as a sign that the administration intends to wield monetary policy to influence long-term bond yields. Really? We've known about that for a long time. It's now being publicly said by Fed governors, which is obviously being driven via the politics. Yeah, we know that. So we'll see. We'll see. The Fed is going to be an incredibly difficult thing to unwind. But now the talk is out there that I never expected to see in 2025. Yeah, we always said, is it ignorance or complicity? It's looking more and more like complicity. So now we need to take what it is, but we don't wait for that as individuals. We're already well ahead because we understand the ownership of sound money in whichever form you choose to take it. The potential for the Fed Treasury and for the Treasury and the Fed to intervene in the bond markets to bring down long-dated interest rates has raised concerns about the risk-averse effects, particularly inflation and the erosion of the Fed's independence. All eyes on this new era and its effects on sound money assets. Yeah? So again, if you didn't have this information, you'd just be letting it wash over you. If it was even mentioned on mainstream media, which by the way, this isn't, and you'd just carry on in life. Oh, it's another recession. Oh, prices have gone up. With this information, not only are you aware of what's happening over this next cycle, most importantly, you're aware of what you need to own to take advantage of the change in the cycle. That's called a wealth transfer. We can see it because in the meantime, Bitcoin liquid supply hits new all-time highs. More Bitcoin than ever is being locked away by long-term holders, just as we did with gold from back in the, a long time ago. Supply shock brewing, demand keeps climbing. Off we go. Yeah? So you look at it on the big picture, and you'll see how it all connects. So some massive information came out this week. Hopefully this is useful. Very briefly on politics. Just all backs everything that I've been talking about. This is just this almost backstops everything now. It's fascinating to observe. It's a thrill to observe, actually, because we've been so frustrated about this over many, many years, certainly since 2008. We're so blessed that we're in front of it, that we can sit down on a Monday and just have a few moments thinking on this level. And then after this meeting, we can go away and do something about it, as opposed to just letting all this wash over us. Yeah? Now, there's going to be no right or wrong in politics. There never has been and there never will be. But all you can do is live in it, in the moment you're in, and adjust accordingly. And if you've read a book called The Sovereign Individual, you'll understand that no longer is a case that you're hamstrung into the politics of your country. If you have the fortitude and determination and drive and enthusiasm and what it takes, you can go and live anywhere in the world now and take your business with you. Literally and metaphorically. Trusted market sentiment, Fed Watch reveals a 90% probability of the Fed rate cut again in October. We just had a Fed rate cut last week, 25 basis points. Okay. You can see the aftershock of that living in Bitcoin as we sit today. But again, don't look at the day, look at the month, right? It's all about making sure that you see the big picture. So as interest rates come down, more liquidity goes into the market, that has a positive effect on assets such as Bitcoin, etc. US and UK are expected to announce, it's not expected, it actually did happen, announced a new crypto cooperation deal last week. Okay, again, heavily driven by US politics and US economics. Okay, whatever you make of that, but it's happening, it's good to see, in my opinion, and the Europeans have no choice but to follow. The UK certainly have no choice but to follow. And then Reform See That, which is, if you don't know, one of the parties in the UK currently running up very, very fast behind the traditional parties of Labour and Conservatives. I've written a podcast on this, actually. It's out tomorrow, 9 a.m. UTC. Have a listen to that. It's all about what Reform are now bringing in. What they're doing very well is the slipstreaming Trump, obviously. They're watching what Trump does and they're just echoing it in the UK. That's all Reform are really doing. It needed someone to shake the cage. It needed someone to bring in, what some might regard as common sense, bring countries back to a business footing, right? Stop this malaise, as I say, and bring in some level of control, okay? we want to be slipstreaming that whole process. Whatever we make of the end result is something to determine in the future. The whole point right now is to get your own house in order, and you're best served doing that by taking advantage of things like crypto, deal, cooperation, etc. Technology, in other words, own the technology. Don't be used by the technology. The House just voted to combine Bitcoin and crypto market structure and anti-CBDC bills. That went through. That was an important one last week. So that's just another rung on the ladder again. UK Treasury takes the next steps in turning Genius Act stablecoin into regulation. Okay, very important. Luckily, we've got a good few years ahead of us with this type of mindset and demeanor within the political environment. So the public period is now open. Okay, up until the 20th of October. Again, this is very much US based, of course, but it's the same old thing again. Pick up the phone to your senator, write to your senators, and be prepared to do the same if you're in Europe. There is no question that European politics will have to follow what's going on in the States. They just don't know it yet, right? And they're going to fight and fight and fight, as we're finding there with reform and the Bank of England. Yeah, the Bank of England is trying to fight this because they don't want things to change, right? So the whole idea is the US is already going through this. The populations of Britain and the Europeans will observe it if they're tuned in and listening to sessions like this, and they'll realize how it gives them power to go and do something in real time simply by owning the underlying assets that Treasury, countries, and institutions are putting into place, such as Poland. Poland launched its first Bitcoin ETF, now trading on the Warsaw Stock Exchange. Okay, so that's a good example of what I'm talking about. Yeah, they're not hanging around. They're not waiting for permission from the Central Bank of Europe or the Senate in Europe. They're getting on with it as sovereign states. It's happening, and it's only going to get faster and faster and faster. Now, the big thing that's really behind all this is the US-led change to fiscal and monetary economic policy. Okay, this is happening in a digital-friendly system. Don't underestimate that. Other economies must follow. The malaise is now over for decades, certainly since the 90s, arguably since the 80s. You've had this very strange economic and fiscal monetary setup with countries, which is only becoming strange to look at now. We've lived through it, don't forget. None of us were really aware of it enough until 2008. And then we realized that all they've been doing is building debt on printed, failed monetary policy, failed fiat, right? And if you look at fiat in its truest form over centuries, you'll know that every single fiat system has failed. What makes this one any different? Nothing. Now, they've run it right to the death. There's no question about that. But they're going to keep it on life support. Don't be under any illusions, especially in the European Union. But what you're seeing, and we're observing with great interest in the US, and many people don't like it, of course, because they've got this emotional distancing going on between their established sense of normal, what they've been used to for 40, 50 years in terms of liberal politics, and now all of a sudden the business guys come in and they're starting to put things right very quickly. And that's what people don't like. They don't like things changing, let alone changing quickly. So you're getting big economic resurgences going on, right? You're getting big experiments like the tariffs. Lots of people of, my generation and older think they understand all the tariffs because they think they've seen it before. It's never really worked before, right? So what makes it different this time? We don't know. We're going to find out. But all that's happening is you're getting these huge billions of dollars coming back in onshore, and from the American point of view. The UK is starting to do it slowly but surely as well, just holding the coattails of the US with 15,000 new jobs, blah, 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 right? This whole idea is that it doesn't really matter, just follow the money. Rates are coming down, yes, no question about that right now, obviously. Small to medium businesses can now resurge, which is the heartbeat of any economy. Yeah, it's one of the biggest problems you've got in countries like Germany and the UK. CapEx, people spending capital expenditure, is bound to explode now through confidence, cheaper money. Homes will sell again because of lower interest rates. That's a slow process, but it's coming. Equity will be unlocked, which is what it's all about. and sidelined money will flood into real assets, Bitcoin, gold, etc. Right? So everything cascades. Get rid of the malaise, shake off the political opinions of right, wrong, or indifferent, and start to put people on the front foot for them to be able to make their own minds up about what's right, wrong, or indifferent. Certainly don't tell them, and certainly don't regulate them and monitor them in terms of what they can and can't spend. Yeah, communism through the back door is what a lot of these certain politicians would like to see. The whole thing is not going to happen because luckily we have a good run in front of us now, not only understanding this a decade ahead, but we're also now running into this next 5 years along with AI to make sure we're part of the solution, not waiting for the assistance. So big topics, guys. I know it's always big, the political and the geopolitical and the macroeconomic aspects of what we do at DBM are always big topics. Lots of opinion, your opinion, our opinion is our opinion. It doesn't really matter. The whole point is to make sure that you just use the logic of where the world's headed to get in front of the curve and make this next 5 year cycle a much more effective use of your time than maybe you've had for the last 50-year cycle, right? In terms of your life. So it's doable. We're enjoying it. It's very, very possible. So now we go into part 2 of this call, which you can find the link to below inside the academy, because we go into much more detail. We need the protection of the academy itself in order to talk at the level I'm going to talk about next. And we'll show you how to connect all the dots. But most of all, stay up with connecting all the dots. You don't just get involved with something and hope it's going to work. You have to work your business, right? And that all starts with mindset and skills. So if you want to get involved with the Wealth Builder series, just click the link below, $25. Get on the train or get back on the train and make sure you're taking it seriously so that you can get ahead over this cycle like never before. Great job. See you on the next call.